Good afternoon, traders. Today is Saturday, February 18th, and today I've got kind of a special edition VIX and the dollar discussion. Got a couple requests out there from you guys and had some recent discussions around that as far as what the perception is that the VIX and the dollar are going to rebound and send the markets lower. But I'm here to show you the reverse is going to happen, that they are going to be soon. I mean, not this week, but we'll just say in the next couple of weeks, perhaps, they're going to be experiencing a precipitous fall or collapse. Okay, I'm going to show you the MACD, the weekly MACD for the dollar and the VIX. That's going to make this irrefutable. Cannot be denied. Okay, I'm also going to show you the some charts where the EMA 50 will be the resistance that they cannot cross. Okay, and I'm also going to show you some actual flaws with the natural cycle style of trading. Flaws with evidence that it has been completely flawed in 2022 and will be for 2023, because I'm going to invoke the famous Larry Williams, who I in 2021 subscribed to his news bulletin, and I received his natural cycle forecast for 2022. I'm going to show you how that worked out. I'm going to give you a little hint. Not so well. Okay, so start off with this. On December 17th of 2022, I released this video that you just saw, the VIX, the death cross. I titled that video The Death Knell. Now I'm going to show you soon what I saw in December. And that is still true today. Okay, but before we get into it, let's get into a very quick MACD discussion. I showed this slide yesterday. Somebody on Twitter said, "Are you bearish now?" Yesterday, intraday, and I said, "Not yet." MACD made a higher, should have been higher low. Sorry, that's typo. Yep, higher low signals a bottom right here. See that? Here's the MACD. Because I'm showing you this example. I'm like, why are we looking at intraday for SPY? Because I'm about to show you for the dollar and the VIX what that looks like. Okay. So it made the higher low right here. When this made a lower low, this made a higher low. That would be equivalent to this point right here. And what happened after I said that signals the bottom? Here we go. Okay, so you got that visual in your mind right now, right? You must have a higher low notch on the MACD. Full stop. There is no exception to that rule. No exception to that rule. Full stop. Okay? So you got that in your mind right now, right? So this is the MACD intraday. First, I want to show you SPY, the weekly chart. Weekly chart for SPY at all of 2000. Well, here's 2022 right here. See that? June, that everybody thought was the low. No. October 13th, the hive was the low. Why? Because you have the higher low notch. See that right there? Let me turn on my pointer. Turn on the pointer. Come on, here we go. Higher low notch. That is the bottom. Just like you saw a moment ago when I talked about, no, the MACD needs to make a higher low notch, and then that's the bottom. October 13th is the bottom, guys, for the market. Okay? But for now, I want you to focus on this left arrow. See that? See how it's starting to curl up? It's starting to curl up. This is the June. Well, actually, this is the June low right here. But it's starting to curl up in July. Okay? It's starting to curl up in July. But I want you to look at the proximity where it is to the zero line. Too far down. too far down. It was never meant to get back to the zero line. All it was meant to do, from a market maker's perspective, come up and then come back down. Remember, I always say in my previous videos, you will retrace about 90%. And that's exactly what happened, isn't it? It retraced 90% here, from the starting point here, higher low. That's the bottom. That is the bottom. Okay, so I'm showing you this for a reason, because I'm about to show you DXY dollar first, then I'm going to show you the VIX. Here, old DXY. Let's go to today, right here. Today. You haven't even started to create a notch at all. Okay? Let that sink in for a minute. You got more to go, bud. You got more downside to go. Look what happened here at the same spot. See, right now, it's just now starting to curl up. Too far from the zero line. Too far. You're too far. You will not break that zero line. I'll show you another slide in a minute. That zero line is equivalent to, guess what? The EMA 50 line. Right now, it is at the EMA 50 line. I promise you, and I will say this with 100% certainty, 100%. This line will be resistance, and it will fail. DXY will fail to take back this line, 100%. And if I'm wrong, you could leave me a comment and say, you were dead wrong. You're dead wrong, man. Okay, that's fine, but I'm not going to be wrong on this. I'm not going to be wrong. This move right now is simply an impulsive backtest move. I'm going to get into that a little bit too on some subsequent slides. This is simply an impulsive backtest move back to the EMA 50. EMA 50 100% will be resistance, because that zero line right here is equivalent to the EMA 50, and you're nowhere near that. You haven't even you don't even have a positive cross on your signal line down here. Look at that. Okay? Look what happens. This is why I got this arrow. This is a classic example of this. It comes down, impulsive move back up, because you're so far down below the zero line, you're going to get rejected, and then you're going to go down further. Look at that. Come down, impulsive move back up, get rejected, come down further, then you created a higher low notch. And that was the bottom. You haven't even started to create the notch yet. Okay? 100% DXY will go down further. I think significantly further. 100%. This is simply an impulsive move. It's an impulsive backtest move. I'm going to show you more slides, subsequent slides to this too, that proves it. What do we got for the VIX? Uh-oh. Hey, you're kind of in the same spot, aren't you there, bud? Weekly, you didn't even do it. You don't even have a positive cross yet. You are not going to be surging on the markets anytime soon. In fact, you got further to go too. I estimate by the time this is all said and done, VIX is going to bottom somewhere between the mid-teens, between 15 to 17. VIX has further to fall. VIX is no exception. Look at these arrows. Anytime it tries to do a positive cross, but in this case, it actually made a lower low. When you do that, it didn't make a higher low notch. It made a lower low notch. And guess what? You kept going. You kept going. SPY was no exception. SPY kept going. All the way through June. Everybody thought, oh, the June 17th, June 17th, June 17th, that's a low, that's a low, that's a low. No. June 17th is like, right, we'll just say around here. It was actually, it's off the screen now. You didn't, in June, you didn't even start to create the notch yet. That was not the low. That was never the low. October 13th is the low. VIX, the dollar, MACD formation is identical. Neither one has even started to create the notch yet. Both are going lower. 100%. VIX will not be going to 30, going to 40, going to 45, 50. Oh, no. No, 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 no. I'm going to show you some other slides that just conclusively just end this debate as well, too. Okay? Okay, you remember Boyle? I talked about that last night when people were asking me, and I just said, look, man, the weekly is absolutely horrific and is in free fall. That was Boyle. Remember that? I talked about that last night. You want to see Boyle's weekly MACD? Huh. Doesn't that look kind of similar to the VIX and to the dollar? Kind of curling up, but hasn't had a positive cross yet? Yeah. Okay. So, what do you want to debate about now? There is no debate. It's over. The dollar and the VIX, and this is the MACD. I'm going to show you the actual charts also. That's going to, like, yeah, that's kind of it. That's a wrap. Okay? So, let's go to the next one. Here we go. I'm showing you this intraday. This was back on 2/9. Specifically, I want to call this out right here. What this tweet shows out. Because I'm going to show you the VIX chart and Dixie next. So, on this day, we actually got puts. Kelly on Twitter, okay, so what happens is the price came down under this gray channel. Came down, impulsive back test, move back up. You're going to see that again with the Dixie. Impulsive move back up, but wick down. Wick down. That is the entry point to get a put. Your entry point to get a put is not up here, and it's not here. It's when you do the impulsive back test, move back up. Now this is resistance, wick down, failure. Okay? You got that in your mind. So I'm going to show you another one. That was the day before this. Yes. It is right here. Okay, it came down. Impulsive green back test up. Hit resistance, then down. Okay, you got that visual, right? Okay, so now that's what I just showed you was impulsive back test, move back up, failed, hit resistance, went back down. Okay, so that's what I just showed you. Now I'm also going to show you what I showed last night, right here. Red candle straddles the EMA 50. That is a failed back test because the candle close was 405.41. EMA was 405.44. Nope, no dice. That candle body straddled the EMA line, and what happens? Down. I'm going to show you that on the VIX. That's why I'm showing you this example. Okay? I just kind of want to jog your memory so you guys know what I'm talking. Remember what I'm talking about in previous episodes. Dollar. Yes. Let's start off with the Dixie futures. Okay. Down, under the EMA 50. Down, impulsive back test, move back up. It's now right at the EMA 50 line, but you on the MACD are well below the zero line. The zero line on the MACD, by the way, is equivalent. They are identical with the EMA 50 line. But because the MACD line is too far down below the EMA 50 line, and it hasn't even had a positive cross yet, it is 100% certainty it will fail this as resistance. It's right now it's in the impulsive back test move. It's going to even maybe slightly stick its head up above it, like it already tried to do right here, but it got wicked down. See that? It tried to stick its head, oh, wick down. Tried to stick your head, oh, wick down. Okay? It's probably going to try to do it again, up, but then it's going to go wick down. Selling pressure down, and then it's trying to kind of come up, and now it's on this move, it's not even going to be able to wick above the EMA 50, which is at 104. By this time, it's not even going to be able to wick above it because you're too far down below the zero line, and you haven't even had a positive cross yet. It's going to go hit that as resistance, no wick above the line, and then it's just going to go boom. 100%. 100%. This is the weekly you guys are looking at. This is the weekly chart. It's too far down. You haven't even created the higher low notch yet. 100% you will fail. Dixie is going lower. There is no threat for the dollar. Okay? The VIX. Let's check it out. Check it out. This is the monthly chart on the VIX. Let's go to today, February 2023. Let's start with the MACD. MACD monthly now crossed below the zero line. Separation from the signal line and cross below the zero line. That is not good. I'm calling equivalent times. It just crossed below the zero line. And what happened after that? You went down by 15, buddy. You want to compare apples to apples? You got apples to apples. Look at that. And look at that. You have crossed on the monthly below the zero line. That doesn't bounce back, guys. Okay? Look what happens every time. Look what history says happens. Oh, you're hanging down by 15 now. Look what happened on July 2016 when you crossed the monthly. Well, you stayed down there for a couple years. All right? That's the monthly MACD. Now let's go. I'll just zoom in so it's easier to see. Okay. So that back test that that example that I showed you earlier, failed back test, I mean. So that's it right there. Okay. This is October, November. Massive failure on the back test. Straddling that line. Massive failure. And when I put out that video on December 17th about the VIX death knell, the death cross, this is December. VIX tried to poke its head back up in December. Massive wick down. Massive selling pressure. Okay? It's trying to poke its head back up in January. Massive red candle down. And now February. Up. Uh-oh. Now it can't even poke its head above the EMA 50. And you're getting a wick down again. That's what this arrow represents. Failed the back test. Up. Now you're down below the EMA 50. And what did I show you earlier in those intraday slides? When do you get puts? When it starts to go below, impulsive back test move back, it's right here you get puts. Boom. Red candle down. This is the VIX monthly, guys. But it follows the exact same intraday failed backtest EMA or the rules of when you're supposed to short. It follows the exact same intraday rules. VIX is no exception. The dollar is no exception. The VIX and the dollar will experience this exact pattern because the EMA 50 for both of them, for each of those their corresponding securities, will be resistance 100%. They are too far below the zero line. They cannot retake it. They haven't even formed the notch. Remember, when you form that higher low notch, the price always makes a lower low. Always. There is no exception to that. Always, always, always. That's why when you saw the SPY make the higher low notch in October, but the October 13th was the low because it kept going down. See? Got it now? Okay, so I want to show you one more thing on this one. August 2014 consolidation. This, I'm showing you this because if it shows something like this, this is bullish. Consolidation under the EMA 50, not significant number about wicks down. In fact, they're big green candles up. Big green candles up. Okay? So this would have been down, 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 up, down, up. Okay? This is consolidation. This is what you look for if the VIX is about to come back with a vengeance and surge. Okay? Because that's exactly what you got here. That's a big wick. That means VIX. I can't remember what happened in 2014. In this time frame. Boom. Because it consolidated before and then snapped. Okay? Kind of the same like this. See, he's starting to poke his head up. It's really close. And then boom. That is not the pattern that you see right there. Wick down. Wick down. Big red candles. Big red candles. I don't see any big green candle bodies here, guys. Okay? And with the monthly MACD now crossing below zero, no way. There's no way. So you can't quote to me daily VIX, daily VIX, daily VIX. Monthly and weekly override. That's it, hands down. Just like I showed you with Boyle. That's like, Nope. Nope. VIX and Dixie are in the same MACD position as Boyle. Okay? So, on to Larry Williams. I subscribed to him back in 2021. Guess what? On June 17th, that was the low. That's what everyone thought was the low. He sent out this bulletin. I'm sure some of you guys are also my viewers, subscribers, subscribe to Larry Williams too, so this probably looks familiar to you. But I just want to call out something. And my point here is, be careful who you listen to. Be careful. They're not always correct. Okay? Larry Williams is popular. He's mainstream. Kramer, CNBC, talks about Larry Williams all the time. Okay? That's how I learned about Larry Williams, because I was watching Kramer back in 2021 on CNBC. On June 17th, he sent out this bulletin. This track record indicator, in the last 89 years, so we'll just call it a century, has had 18 such signals. The vast majority were within 3 weeks of the low, and the last 4 within 1 week of the low. Okay? So, immediately right there, this introduces bias into your thinking, because now you're going off statistics. Well, it should do that, shouldn't it? Because if the last 18 were this, and the last 4 consecutive were within 1 week of the low, therefore, it should, there's that word again, should do this. But I would flip the question around and say, but does it do this? The answer is heck no. You were 4 months off. That indicator for the last 89 years wasn't even close. What are you saying? Well, the last four consecutive were within 1 week of the low? There's the word should. Okay? So everyone knows Larry Williams is the natural cycle expert. So why don't I show you the next slide? Since I subscribed to him back in 2021, he actually sent this out. If you guys probably subscribe to the same, you would recognize this forecast. This is Larry Williams' natural cycle forecast for 2022. He sent it out in December of 2021. Okay? This is the reason why I don't subscribe to natural cycle either. Because if I showed you the actual results, how did that match up? Not so much. It only started to get in line in October. Okay, but that's 10 months into it. All right? So, natural cycles are too broad and general. It's almost like you're trying to predict summer of 2023's weather pattern. or spring of 2023's rain patterns. You can't do that. There's too many variables. You can't just rely on, well, the last 10 years did this. Okay, but where I live, in December, we hit all-time lows in December. It got down to -7. Okay? That hadn't happened in whatever. I can't remember the last time it happened. So, there you have it. You can't allow these things to influence your thinking as things that should happen. You have to just let the data show you, like, well, no, this does happen. This does happen, not should happen. Because when you start saying the word should, now you're projecting. Now you're projecting what you think the market maker is going to do. And as we've seen this past week, hell, even I couldn't exactly predict what he's going to do. How the heck are you going to be able to forecast this out? No way. There's no way. In fact, there's been so many times this past week and the previous week where I didn't figure out what the market maker was doing until like half or 3/4 of the trading day was already over. And that's only after I saw the data. How in the world can you predict that ahead of time? You can't. You can't. Okay, so there you have it, guys. I mean, I just showed you a lot of data that is, you can't still say, oh, it's going to spike. DXY or VIX. VIX to the moon, VIX to 40, here we come. Y'all better watch out. No, I don't think so. Okay? Not based on what all you saw here on the charts. But if after all you've seen here today, you still think the VIX and DXY are going to make a run and send the market south, well, to that I say good luck. If I was a defense attorney, I would love to pick you as a juror, because then I know I could guarantee an 11-1 hung jury verdict. Okay, so that's all I've got for you guys today. Please feel free to follow me on Twitter, where I give real-time tweets intraday. Don't forget to listen to your favorite music as you're trading. Helps you get into the right state of mind, helps you get into the right flow state. And don't forget to like, share, subscribe, or click notify when I release something new. With that, I'm Agent 000, signing off.